Stan's in Owen Sound. Go ahead, Stan.
My question's about Alibaba. Can you provide some general comments? And can you compare this to Amazon and reasons why or why not you'd want to own this over Amazon and if partnership structure would be one of those reasons? Yeah. And is this a cheap stock given its growth prospects? Thanks.
Sure.
Alibaba.
So Stan, thanks for the question. Alibaba, for those that wouldn't know, is China's largest online marketplace or e-commerce site. Very similar to Amazon in many ways. It is absolutely dominant and continues to grow at kind of 60 to 70% quarter over quarter, year over year, which is great. You made reference to the ownership structure. It's a little bit tricky because it's not a very shareholder-friendly shareholder structure. And if I were comparing to Amazon, the obvious risk is that it's operating in China, and strange things can happen between the state and business in China. And I think you have to understand there is always a risk that the hero today can become the state enemy tomorrow. And so we always keep that in mind. If you wanted to participate in online retail in China, you could use the ETF KWEB, KWEB, which is a Crane Shares ETF with a basket of online internet-related businesses.
In China?
In China.
Okay, KWEB. Okay.
KWEB. But having said that, we own a little bit of Alibaba. We own more Amazon. I have more faith in Amazon. Amazon, from a share price perspective, is behaving better than Alibaba is. We like the backdrop for both Chinese equities and U.S. equities, although we like U.S. equities better. So both very strong companies, but you take on some more risk in Alibaba. On the other hand, you got a giant consumer growing marketplace and business marketplace that are using Alibaba's various sites to benefit from. So I don't think you have to look at them as exactly the same. Mm-hmm. They could be complementary to one another, but they play a part in a larger portfolio.
And Amazon would be your preference if you had to choose between the two right now. Kevin in Peterborough, Ontario, go ahead, please.
First of all, thanks for your wisdom here, guys. I own TD right now. I'm looking to get into one more Canadian bank. I was thinking of Royal. What's your opinion? Would you go into Royal or some other bank? I'll hang up and listen. Thank you.
Kevin, just to clarify, he's looking for Canadian bank ideas, not counting TD. I think that's the story here.
I get that.
Okay,
so Kevin, we have some exposure to Canadian banks. I'll put the disclaimer up front. I would prefer to own U.S. banks. And we own far more in financial services in the U.S. than we do in Canada. Now, TD has lots of good U.S. exposure, as does Royal through their capital markets business. The reason that I would consider a Royal Bank is because it does have such significant capital markets exposure.
And of course, they bought that bank in California not too long ago.
That's right. Yeah. And they have a very sound wealth management business here in Canada. You could take a look at National Bank. And National Bank actually is behaving a little bit better from a technical perspective than Royal.
NA.
And so realistically, the Quebec economy is doing pretty well. National has an interesting franchise. I would look at either a National or a Royal. But we'll talk about more U.S. banks, I'm sure, at some point today.
And you have some more financial ideas coming up. Okay. Speaking of which, stay tuned. We're going to look at David's past picks. That's next on Market Call.